Hi guys, it's Jason from Liberty Bunker. Headline here from Reuters. Entire German government bond yield curve turns negative for first time ever. What is going on in the world? Let's take a close look at this story. The 30-year German government bond yield turned negative for the first time ever on Friday, leaving the Eurozone's members' entire yield curve in negative territory as investors scrambled for safer assets. Germany's 30-year bond briefly hit 0.002%. So it's not negative by much, but it's negative, and this is crazy. Down more than 8 basis points on the day. So what does this mean? This means if you buy a German 30-year bond, if you hold it to maturity, you are guaranteed to lose money. You are guaranteed to get back less money than you invested. This is crazy, topsy-turvy times. Now, how do interest rates normally work? I mean, if a country has a glut of savings, if every German person, had €1,000,000 in the bank and they just didn't know what to do with it, they're all buying, government bonds, you could say, well, interest rates at 0% may make sense. We've got a huge glut of savings. That's how interest rates should work. If your pool of savings is massive, then interest rates are low. If almost no one's saving, then interest rates should be high to incentivize people to save. Now, we know this isn't happening. So what is going on in the world that every German bond now yields a negative return? You'll be better off putting your euros in a safe and just unlocking that safe in 30 years' time. The money in that safe would be worth more than if you had it invested in German bonds. Isn't that crazy? If you want to see a return on investment, it needs to be at least higher than inflation. We know inflation's at least 2%. It's probably much higher. But let's just assume 2% annual inflation year on year over 30 years. Inflation will have eroded a huge dent out of what you initially invested. Not only that, your return on investment is actually negative in nominal terms. So what is going on here? Now, we know the global economy is slowing down. America's cooling, China's cooling, the whole of Europe, the Eurozone, the wider EU, it's all slowing down. So there is a flight to safety. But why would anybody invest in a product or instrument that returns a negative yield? Why not just put your money in the safe? You'd get more money if you just hid your money under your mattress or hid it in a safe rather than invest in these German yields. So what is going on? I mean, the closer look at what is likely to happen, in my opinion, the reason these yields are turning negative is because people are anticipating a large quantitative easing program coming from the ECB. So a lot of this are large financial institutions, commercial banks that are buying these bonds now with the anticipation in the next few months they will be selling these bonds back to the ECB for a higher amount than they paid for them. So a lot of this is banks, in my opinion. Something has to be causing this. Why would anybody else invest in a bond that gives you a negative return? So in my opinion, the fact these yields are going negative now means that the big financial players, the big commercial banks, the financial institutions are anticipating a large quantitative easing program, probably starting in the next few months, maybe 6 months, maybe up to a year. But at some point, we know Europe's cooling. Germany is going into recession, Italy, Greece, the UK. People talk about Brexit. This isn't Brexit. This is the entire global slowdown. This is coming. This is happening. Interest rates are already super low. So how are they going to fight the next recession? They're going to try and do it through QE. In my opinion, it won't work. It'll be disastrous. This is just going to be inflationary, which in a recession, if your wages aren't going up, maybe you've lost your job, or at least you're not getting year-on-year wage increases because the economy's bad, your employer can't afford to give it to you. The last thing you need is the cost of food, the cost of rent, the cost of fuel, the cost of electricity all going up, because that's what happens under inflation. So QE is going to be bad. It's going to be bad for everybody, in my opinion, but the central banks have no other tool left. So rather than just letting the recession play out and the markets clear themselves, they're going to do probably the wrong thing. They're going to dump loads of money into the system, QE. So these banks are standing by, ready to sell their bonds back to the ECB at a higher price than they paid for them. Another thing that could be happening, now this is very likely this is happening, if we suggest that the Eurozone, the euro currency itself, is going to break up. If you are a high net worth individual in a country like Italy, like Greece, like Spain, countries that are likely to face a sovereign debt crisis over the next time frame of a few years, it could come within months, but it's likely we won't see the collapse of a Eurozone sovereign debt crisis from a Eurozone member country, I think it's probably 2, 3, maybe 5 years away. It's very difficult to judge. When big events like this are very difficult to market time. But, the next 1, 3, 5 years is likely we're going to see huge problems in the Eurozone, maybe a collapse of a country like Italy, like Spain, like Greece, like Portugal, Ireland. There's enough of them out there. There's enough of these problem countries out there that one of them will have to collapse at one point. Assume it's Italy. If you are a high net worth individual in Italy and you fear the breakup of the Eurozone, now, are you really prepared to leave your money in an Italian bank? And if Italy has to leave the Eurozone, or maybe the Eurozone just collapses entirely and every country has to go back to its native currency, do you want Lira? Probably not, because the Lira wasn't a great currency. If you're a high net worth individual in Spain, do you want to go back to Pesetas? If you're in Greece, do you want to go back to the Drachmae? Not really, because these weren't great currencies. Now, if you move your money to Germany, into a German bank, or even safer, into German bonds, if the Eurozone collapses, or at least certain members have to be ejected, your money is then either in Germany that it can be revalued into Deutsch Marks, or maybe the Eurozone project will last, but only last as a Northern European project. Maybe France will stay in it. France has still got huge problems as well, so maybe they'll have to be ejected from the Eurozone project as well. But there are a few stable countries in the north that could make a Northern European Eurozone project work. Germany is obviously the powerhouse of Europe. They are the main country, so it's the safest place to park your money. So if you're a high net worth individual in one of these countries that's really struggling, Greece, Spain, Portugal, Ireland, Italy, all these countries are struggling. So if you're a high net worth individual, maybe you're a large investment fund, you're advising your clients to park money somewhere. Maybe you're advising your clients, hey, look, buy a 30-year bond, buy a 10-year German bond. Yes, on face value, you'll be losing money. However, this Eurozone project, how long can it really last? Now, 5 years, 10 years? I can't see the Eurozone project lasting 30 years. So if you buy a German 30-year bond, the Eurozone is almost 100% certain. It's 99% certain, in my opinion, that it will collapse before the next 30 years plays out. So if you have a German bond with a maturity date of 30 years, it's highly likely within that time frame your euros will be revalued into Deutsch Marks, and the Deutsch Mark will remain a strong currency as long as Germany doesn't tear itself apart as the collapse of the Eurozone happens, which could happen, but you got to put your money somewhere. If you're a millionaire, if you're a billionaire, you have to park your money somewhere. I mean, if I was a millionaire, I wouldn't be parking my money in German bonds. I'd be looking at much safer assets, silver, gold, precious metals, because when this thing comes falling down, it's going to be disastrous. It's going to be disastrous for people at the bottom, but the people at the top are, anticipating to have some sort of drawdown in their total value and their net worth. So let me know your thoughts and opinions on this. Why are yields now negative? Is this something that's going to play out for the future? Is this high net worth individuals from southern European countries parking their money in Germany in anticipation of the Eurozone project failing? Is this large financial institutions preparing for a large QE program, which is almost certainly going to come probably within the next year? I can't see them pushing out any much more than about 12 months before the QE starts. Love to know your thoughts and opinions on this. Always interesting to read your comments. If you like this video, please like it, please share it. And Jason from Liberty Bunkers signing off, and I'll see you in a future video.